Okay, so hello everyone. Thank you for joining today's webinar on hosted by BitMEX and ProfitView, where we'll walk you through how to set up and run a trading bot on BitMEX. So for starters, we'd like to remind everyone that this session should not be taken as investment advice. As everyone is aware, trading crypto is high risk, so please make sure to do your own research before you start trading. And of course, be prepared for any losses. Only put in what you are comfortable losing. Now, moving on, let's highlight what's in it for you as an audience of this webinar. So in the next 20 minutes, not only will you learn to make a trading bot on BitMEX, but you'll also get exclusive access to offers and benefits that can be leveraged after the session. So first, those who sign up to BitMEX will receive up to $5,000 in BMEX when registering as a new or returning user, as well as a 1 month free trial of ProfitView, which you should have received an email for earlier today, and we will mention again at the end of the webinar. And to better support your trading bot journey, you're also welcome to join the AlgoAcademy Guild on BitMEX, which is a great opportunity to trade collaboratively with other pro traders and share strategies to win the 3K weekly prize. And you'll also get a chance to book a one-on-one consultation with our team following this session to ask any questions about onboarding or implementing your trading bot.
So to start with, what is algorithmic trading? What is a bot? Well, let's take it back to you as a trader. I'm going to assume the people on this call are serious people. And when they trade, they're not going to trade an amount of money which puts them at financial risk. But at the same time, it's not just a little bet. You're going to actually try to make money with your trading. Now, if you're going to do that, even if you're not trading with a bot, you implicitly you have a strategy. You're not going to go into the market just without thought. You're going to say, well, there's going to be an announcement of a ETF or something like that pretty soon. So you want to get in before that because you believe you have a idea that others in the market don't have. So you have a strategy. You have something that puts you ahead of the market. Now, if you have such a strategy, you should be able to articulate it. And it should be something which can be reused. Now, if that's the case, then you should be able to write it down. If you can write it down and you have some coding ability, you should be able to write it in the form of code. And if you do that, it's a good idea because it forces you to have a disciplined approach so that because you're specifying in your code exactly what it should do and when it should do it. And that's good for you as a trader just in itself. Basically, if you could write the code and then you could trade it manually, that's not a bad idea because you've pushed yourself to have that discipline where the code has to work, has to function properly. But look, once you've written that code, you may as well actually run it because if you have the capacity to do so. With ProfitView, you in fact, you can do that very easily. But this is real. It's real money in the real market. You can make profit or loss, and that makes it exciting and fun. So if you are to go ahead and do this, your algorithm needs data. You need to know where the market is now in order to place trades appropriately so that they can take advantage of your innovation. And you need, of course, to be able to execute via software. And the main thing really is you need a signal that you design yourself, which gives you alpha. Alpha is the excess return your algorithm can generate beyond the risk-related return of the market you're in. So that's what you want to do. You want to think very carefully about it and come up with something that you believe is going to beat the market. So with ProfitView, we provide an infrastructure. And as I was saying before, coming from the traditional finance in big financial institutions, the way that it's done in these places is using what's called an event-driven architecture. And what that means is that events that occur outside the system in the real world are sent to the system in real time. So what we provide is places where you can put the code that executes your strategy, and they will be executed in real time as events occur in market. Events like the entry of orders into the market and trades occurring, and then various things that occur within your own holdings. And also, we provide a way, which we can talk about another time, of connecting with other systems that you might use, including things like TradingView, but various other systems you might put together yourself. So where you can, I should mention that the infrastructure we provide is code in pure Python, Python 3, nothing particularly special about it. Contains the whole Python set of libraries, and also some extra libraries we provide that are useful for trading. Now, with that, you can put together a great range of bots, basically anything you could imagine. We actually will provide a bot to start with, which you can use to as a sort of a launch pad for your own trading. You may want to change it very greatly, or start or iteratively. And a lot of people have used bots like this, including in our community, in the guild, to build some quite interesting bots, and you can have a look at those as well. So we're going to provide a grid bot. It's pretty much one of the most simple, but also very popular bots. If you do a search on trading bots, you are likely to find references to grid bots high on your results. So these are well sort of understood and popular bots. Now, when you write a bot, when you write an algorithm, you need to keep an idea of what trading situations your bot is going to be useful in, because you can't just put it on and think it's going to work in any situation. For instance, we've had some run-ups of Bitcoin recently, so that the price was ascending for some period of time, and that's called momentum. Now, so you can have a bot which is designed to handle momentum regimes. They call these regimes. In between momentums, you have a period where the price doesn't change very much from a sort of a middle line. And that's called a mean reversion regime, because when there are changes, they tend to go back towards the mean. So grid bots are for mean reversion regimes. It's really quite simple. The standard grid bot will put a set of limit sell orders evenly spaced above the trading range, and limit buy orders spread below the trading range. And so the idea is, as prices move upwards, you'll start to sell out, and then as they go down, you'll buy, and you'll get the difference as a that's the P&L you'll gain from the bot. So I've got one running right now, and so I'm going to show you that. So there you see over here that the bot running, and you see that grid of sell orders here and buy orders there. So that's running because this code I have, as I was mentioning, this is Python, and this is the code that we're going to provide from the GitHub, and I'll show you that later on. So let me hand over to Uzi from BitMEX, who's going to show you how actually to get to the point where you can write a bot. And you should feel free to do this right now. Follow along right now, and you should be able to get to the point where you can. I'll show you a bit later how to get some code into your interface here and run it. And you should be running by the time we've finished this webinar.
On the left side is the ProfitView website, And on the right side is the BitMEX website. If you were just to go to each of their main pages, profitview.net and bitmex.com, you will have to sign up with either company, of course, because ProfitView will be helping you to run and manage your bot, and BitMEX will be the exchange trading venue where the bot executes its trades. So that's pretty straightforward. And once you have created your accounts, both with ProfitView and with BitMEX, you'll be able to connect the two, which is what we're going to do now. So let me log in into my ProfitView account, which is really just as simple as creating an email. If you are right now setting up your ProfitView account and it's the first time you ever access it, you will have, because obviously it's ProfitView is a profitable service. It helps you to make money, but because of that, obviously Richard, Jehan, and the team need to make some money for themselves. So you need to sign up, and you actually have to get one of their plans. In this case, for example, I have the hobbyist plans, which allows me to create bots for 2 different exchanges. So then going back to my start page, which, because I have a bot already, shows me my profit loss balances, and Richard is going to talk through this in a while. I just want to make sure that you know how to get ProfitView set up so that it's connected to BitMEX, which brings me to the other side, bitmex.com. Once you have created your account, what you want to do is obviously you want to go and trade derivatives. This is how my start screen looks on BitMEX. I have already logged in with my start screen. If your BitMEX start screen looks a little bit different, we always invite you to play around and customize it. One of the biggest advantages and really best services for BitMEX is that we can fully customize your trading GUI. So I, for example, here show 2 different charts. I have my news feed activated, which you can do through the customization window. I have rearranged my order controls, etc. And that just is the way I prefer my BitMEX setup. There's also all kinds of color schemes available by now. So you can choose if you like a light or a dark color scheme, etc. Just make sure you spend a bit of time and set up your BitMEX trading GUI in the way you like it. Even if the bot runs it, I think it's still nice to look at a BitMEX front end that looks pleasant for you. Now, once you have set up your account, once you have done KYC with BitMEX, and by the way, if you KYC with BitMEX, you get up to $5,000 in rewards for your first 30 days of trading. So there's a good offer, and Claire has already highlighted that. We'll obviously share all this with you after the webinar. But once you're done, once you have logged in, you go to API keys, right? In the settings menu here on the top, go to API keys. And what you want to do is you want to create a new API key, which in this case, we're going to call it ProfitView. I'll name it. I'll make sure that the key permission is at least order. And I will have to add my 2-factor authentication. Using this account, and I create an API key. So this API key, right, will be helping me to trade on the account, on this very specific BitMEX account. Now, on my next step, I'll go to my ProfitView settings. So you open settings, you go to exchanges. Here I have one set up already, but if I were to set up a new one, I go up here, select an exchange, go to BitMEX, and I copy and paste my ID in here and my secret in here. And I will call it BitMEX ProfitView. Make sure to remember this. Oh, ProfitView. Make sure to remember this name, as it will be important once you create your bot. And I go connect. And now I have essentially connected ProfitView to my bot. I have created an API key, and this bot will be able to execute orders on my BitMEX website, or on my BitMEX trading page. And that's it.
Okay, so what I've done here is, well, I'll do it again, actually. I'll do it right now. So when you actually start in ProfitView, you will see exactly this. And you get it at the start as the only file that's displayed, but I'll just create another one just to do it. Okay, there we are, created it, and now I'll call it something. I'll call it GridBot. And then there it is, GridBot. Now, as I say, this is the default code which shows the entry points for the event-driven system, but we won't go into that now. I'll just grab a bot. So where you go, what you do is you go to GitHub, GitHub/ProfitViews GridBot, and there you'll see directory talking about this and the previous webinar. And if you go into source, you'll see webinar 1. You can have a look there if you like. But webinar 2, there's one file, and it's called starter.py. So you go there and you just, well, this is what I do. I guess you can, well, however you want to do a copy, I do Control A, and then Control C, and then go over to ProfitView, Control A, Control V. Okay, there it is. Now, you must remember to click Save, or else nothing much will happen. So I save that. That's now saved to the server. And the other thing you need to do is, if we go to the top of this this code, so quite a lot of code here, but much of it you don't really have to look at this point. And we can talk through it a little bit later. But this symbol, which has been chosen, is the most liquid one on BitMEX, XBT, the famous XBT USD. So we've got to get the data from that market. To do that, you click Markets here, go to BitMEX, XBT, USD, choose it. There it is, it's in. So we go back and you'll see Markets 1. Now, let's go back to BitMEX and we'll run this bot. So I start that and it's going to wait a couple of seconds, and then there you see it. The grid bot is running. Now, I'll just go through a little bit of some explanation of this sample bot that you can yourself get going with. The way I've put it together is that the parameters that basically control how the bot works are in the top part here. So they're sort of easily changeable. Now, the first thing is this is the interval. So the way this type of grid bot works is that it places the orders, the limit orders, above and below the trading range. But of course, that trading range changes over time. So what it does is it resets them every certain interval. So in this case, it's every 60 seconds, every minute, it will reset. And you'll see that in a few seconds. There you go. Well, that was good timing. So it's reset it. Of course, hasn't been much change in the trading range, so it doesn't really do much. But if there was a bit of momentum, it would reset to the higher, to the changed trading range. So the symbol which you can change to whichever BitMEX symbol you're interested in. The number of rungs, that can be changed. You can play around with that. Now, this multiplier is a multiple of the base size. Okay, so this is the number of the size of the. Oh, sorry, it's not multiple by size. This is a multiple of what is effectively the standard deviation of the past 1,000 minutes. Now, all of this is one way or another configurable, but the important thing about it is that you can use it to squeeze down the breadth of the rungs and make it sort of more aggressive. So it's more likely to catch changes. At the moment, it's very conservative. The value of 1 is very conservative because it's the standard deviation across 1,000 minutes. And so generally I would have it sometimes even 0.1. 0.2, 3 is about, probably about 0.4 is a reasonable thing to leave it for an extended period. Now, this parameter, the base size, that's in US dollars. So each time there is an entry of an order, it's of a notional of around about 120 US dollars. So the reason why we need this concept is because different coins have different lot sizes. So if you just go by lot size, you'll end up with sort of a wide range of scales of algo when you go across different coins. And I think most people will want them to be scaled about the same. So if you change this to ADA USD or something and use with this algo, it'll be approximately $120 worth for each trade. So that can be adjusted. If you go too low, you can go below the lot size, and then you won't. Then you'll get an error. So you can play around with that too. So this is the so for each order entry, you can scale it up by. I've sometimes used 10 here, so it'll throw in orders of around about $1,000 for each one. Now it sounds high, but remember it's a sort of a notional $1,000, and yes, it's at risk, but typically, Bitcoin's not going to go down by more than a few percent. So you're not really at risk by more than basically the percentage change of Bitcoin. Now, limit is a useful one because this is sort of protective of big momentums. What it means is that at the moment you have orders both above and below. Now, if you have a trend upwards, you're going to have lots of sells, selling as you go upward. Now, once you pass a certain number of sells, you've got a big position on one side. And that's getting risky. So what it does is once you get to 3 times the base size in net orders on one side, it stops entering orders on that side. So it's just a little protective thing. And this, if you run it for a while, you'll see that happening every now and then. There'll be a bit of an upward movement, and you'll see it's only got one side of the book. So that's about, these ones are just sort of technical things. Sometimes when you're dealing with a less liquid market, it'll take a while before you get your first quote, so you can sort of lengthen that. And then also when you're entering, when the API is being used, there is a limit. You can't just send thousands of orders a second or thousands of API requests a second. So this puts in a little delay. So you can experiment with that too, hit your API limits, see what happens. And there's a lot of things. That's a fairly brute force way of dealing with API limits because you get back your remaining API and you can use that to sort of tune your sort of frequency of requests. There's a lot of stuff you can do. This is quite a simple bot, but it does work. I'll actually show you how this very bot has performed since about the last webinar we did, which was the 13th of November. And so this is basically the performance of that bot. And so you could say, well, it's returned 20% in a month which is, very good. But obviously some things have gone wrong here. And there's a bit of chop. What you really like, and max drawdown is terrible. Lost 21% at some points. So, what went on here? And basically what I did is I set it running and I just let it run because I wanted just to make sure it's all working fine. And I was very pleased when it started making some money here. And then there was some surprising, it wasn't quite as good. It went flat for a while. Then I got a bit more money and then, whoa, what happened there? Well, I told you about momentum and mean reversion regimes. If I look at it by symbol, then it tells the story better. So this is basically my bot, and it's doing very well. And I could have made changes I could have turned it off, or I could have done things, but I just left it running. You really should look after your bots. But just as a sort of an example, it's quite interesting to see it. What happens here? Well, we get momentum. Bitcoins rally, and when you get momentum, when you're dealing with a mean reversion bot, well, the bot loses value. So that's the story. And when you're running your own bots, you won't let this sort of thing happen. You'll keep an eye on it. That's your responsibility. My name is Richard Hickling, and I don't mind connections from traders, from people who are going to be algorithmic traders. It's great to sort of be part of this community. Please, so if you've got your phones there, I'm going to put all this. Let me do it now. I'll do it just. I'll put all these links in the chat of the Zoom as well. But if you've got you want to grab those QR codes, our Twitter and that GridBot GitHub as well. So I'll put it yeah, you have a look at our past events. I'll put all these links in the chat just shortly. There we go. Yeah, okay. I will stop my share, and if necessary, I can share the code. So yeah, what's our first question?
The first question came from Chris, and he's asking whether the grid bot does automatically adjust in the event of a rapid variation up or down, or is it centered around the average value with a standard deviation mechanism? So looking at how you've configured it, Richard, I think it would probably follow a little bit, but it does have like a kill switch, right?
It's a great question. It's a great question. It comes to the heart of what this grid, how this grid bot works, and what it does. It is a very simple structure. There are lots of ways of improving it, but yeah, it is a mean reversion. It's designed for mean reversion. Therefore, when there's momentum, that's a risk to it. And the easy answer is you shouldn't really be leaving it over a long period of time. That's what I did, and therefore you see the results, my drawdowns. When momentum occurs, you are encouraged to manually turn it off. Of course, you can write code that predicts momentum change, predicts regime changes, and that's definitely a possibility. Jahan was talking about a way using hidden Markov methods and this type of thing. And there are Python libraries available to implement that type of thing. But this one, yeah, it's a mean reversion algo, but it does have some protection. You could say the imminently reverting of changing range is one part of it, and then the other thing is that it limits how far it will go one side of the market. So it sort of protects you a bit, but you can see by the returns I've shown from the bot I've been running, the protection is not complete. So,
right. There's another question coming from an anonymous attendee, whether it's possible to use popular libraries in ProfitView, such as CCXT, PandaTA, Taleb.
Okay, well, we do include pandas, we include TALib, we include a few more. I don't have them at the tip of my tongue right now. CCXT is not necessary because we already have the exchange connections. But we also do encourage people to ask for other libraries. We include SciPy, NumPy, and maybe Jahan, you can tell me, but you can ask. We'll give you a list of all the libraries we include. And yeah, we're looking to bring on other libraries. I should say that we are just about to make available Redis so that you can communicate between your bots very easily. And in fact, you'll be able to, with some pretty high performance, bring in data from outside. So if you have some machine learning system, you can pull that in via Redis and be able to incorporate it in your bot.
Yeah, I've just shared a link there in the chat. There is a list of libraries that we install by default, but in theory, it's just a Python environment, so we can install whatever you like, really. I have a Google form there as well. So if people want more libraries installed by default, please request them there in that form, and you can, we can add more.
Yeah, I mean, it is full Python 3, so anything which is in Python, it's Python 3.9 at the moment. We'll keep upgrading. Anything that you can do in Python 3, you can do in ProfitView. And we're interested to see what innovative methods people come up with, and that's something which is always good to see when people do something interesting.
Right. We have another question that came from Chris as a follow-up from the bot question, which is it better suited to have the bot up for distribution trading situations? So basically, outside of momentum, is it useful to turn off the bot, basically?
Well, yeah. I mean, it's for one thing, you can one way to address problems that you see, or when you see drawdowns. I mean, basically, when you have a regime change, it's likely to cause a drawdown. So you can address it in that way too. Okay, why specifically did this drawdown occur that time? You go back through the history. How was your bot performing, and should you basically tune it a bit different? Maybe cause it to lengthen the interval, or change various ideas on it. Now, as an example of the type of changes you can do, we have a bot, and the guys in the Discord will explain it to you, which rather than setting the price levels by just evenly up, it uses the RSI technical study to choose the levels. And as an example of that's a great way to go. So, why would you have even levels? And also, you might use some mechanism of choosing the amounts that you trade in each of those levels, and you would want to develop basically a financial mathematical model around that. And there's no end to the research you could go about to bring that into work. And so you can start with this bot. And what I can say is, I've been running it for a month without really touching it, and yeah, it's not been done so well just recently, but I've still got a reasonable return on it. No guarantees, but that's my experience just over the last month with this simple bot. And you should use it more. You should put more care into your algos, and that's where a lot of the fun is too.
Yeah, I think it's an important message, right? What we are giving you here is really just a first glimpse and the I guess first satisfaction of seeing a bot running and trading for you. It is not a guarantee to make money strategy, and obviously it's a nice template bot to go and get started and refine further, right? That's really the message.
Yeah, that's right. And look, if it's some way sort of confusing, or you're not confident with it, then we're looking forward to some chats on one-to-one. Happy to do that. Those who might use it for Type A Blockchain Week, I will make myself available a bit over the weekend if you want to have a chat to get you. Or when's the hackathon start? I think
it's happening on Monday to Wednesday. Next
Monday
week,
to
Monday
Wednesday.
to Wednesday.
So
if any participants are here, we'll make sure that Richard is on speed dial for any help.
Yeah. I mean, I'm interested. It could be. It would be great if a ProfitView bot won. I mean, that'd be pretty nice.
It could be yours, Richard. It could be yours.
Right? It's not.
You might as well compete.
Yeah, I should actually. True. Why not? Yeah.
We have another question from Xiangye Fenqi about what ProfitView can benefit us if they were already using TradingView and webhooks to do the algo trading. That's a very interesting question.
Yeah. Okay. Yeah. That is it's a great question because if you're using TradingView and webhooks, so you'll be going through another third party to execute the trades, or perhaps direct to exchanges in some cases. Now, TradingView we love. TradingView is such a great product for composing your strategy, for visualizing it, and it has great. The use of PineScript is really a great innovation. So the thing is, though, when you use it, go on.
Yeah, sorry, Richard, I don't mean to interrupt, but I have a demo ready just to showcase TradingView.
Yeah. Do it.
If you guys are interested. I think we've talked about it a few times, so I thought may as well share this.
Yeah.
I'll make sure I'm sharing my correct screen here. So can you guys see that okay?
I can.
Yep.
Okay, great. So it's pretty straightforward. I mean, the script or the code that Richard showed you earlier was maybe a quite complex example of what we can do, but really the most simple stripped down version is just using webhooks. And for that, we really just need to have these kind of functions defined. And this has this Python decorator, which basically tells us that we can use, we're defining a way of kind of connecting and communicating with this running bot. So I've got two webhooks here. I've got one here, post trading view. I'll explain that in a moment. But just as an example, I've got one here, fetch balances. So I come in here. Actually, let me just, I'll just call it get tests. So that URL here, if I go to that URL, you'll see that it's gone off and fetch my balances from BitMEX. The way TradingView works is that basically they accept URLs and they get sent as a post request. So you can see here, post request here that triggers alerts. So what I would do here is basically I define here my logic. TradingView will send me this data payload. I can specify what that is, but basically I need to be able to handle this. I need to be able to, write code like, create market order, create limit order, whatever. But I paste my URL in here, go to the webhooks, copy that, paste it in here. And then I'll get it to go off. I've already got it to go off once, but I'll make it go off again, just so we can see in an action. So let me just say 3232. Let's say the price goes trigger every time. Okay. So there you go. We'll see whether it goes off. I'm not sure.
While we're waiting for that to go, I should tell you the sort of
yeah. So that's just
got one, yeah.
Yeah. So it's just gone off there. So you can see this function was called, and TradingView sent this message, XBT USD crossing, so on. So that in this case, I'm just sending this message, but you can actually send a JSON object and pass in extra parameters. So if you're doing something more advanced, like using Pine script, writing signals, you can pass in all kinds of parameters and handle those parameters here. And I should just say one thing as well about safety. So at the moment, I'm sharing with everyone my URL here. So obviously that's not ideal, but you can actually whitelist IP addresses here as well. So I've got some IP addresses here that I've whitelisted, and only those IP addresses can access my trading bot here. And TradingView, if you come in, if you do a search, you can actually see they've got a list of IP addresses that you can basically permission to receive webhooks or to send webhooks. Like for example, if I remove any IP whitelist and I come back here, actually, let me just check. I think actually I need to check that, but basically the whitelisting should be there. Okay, yeah, I think that's what I really want to see here.
And what that shows as well, you're able to do TradingView connecting to a webhook using something like 3 commas or a similar trading bot platform like that. The main difference here is that you can actually run arbitrary code has online. So you can run arbitrary code here instead. So if you want to get your balances, for instance, from BitMEX, run a calculation before you decide if you want to trade. That's something that you can do where you wouldn't be able to do with just connecting straight to a webhook. I think that's the added value. So you could run something like this grid bot, and you could take in these signals that you're writing from TradingView, and then adapt your positions based on them. And that would be, I mean, it's not necessarily trivial. You need to learn, you need to be able to code that. But that is something that you're getting. And obviously the other benefit, ProfitView is right next to BitMEX's servers. So the latency that you'll see is, in the sub 10 second, so 10 millisecond latency, which you're kind of not going to be able to. I mean, there would be a lot of effort, a lot more than $30 a month worth of effort to support that yourself.
Sorry, what
Sorry.
happened with a whitelist. It wasn't a bug. Basically, if I don't have any whitelist, it would accept anything. Oh, so that's basically what happened. I'll just explain.
Yeah, that's right. So what I guess you can get the idea here that using TradingView with ProfitView gives you more flexibility, because you can look at your state, and you can do things like, for instance, set up a number of indicators in TradingView, all sending signals to ProfitView, and then ProfitView will weigh them up, or you can sort of weight them, and that allows you to write simpler Pine script. And sometimes the problem with Pine script is that it takes too long to run or use too much memory, and it can cause problems. Well, just make lots of smaller Pine scripts and then sort of corral them in ProfitView to do your executions.
Right. We have 2 questions about backtesting, but there's another one before we go into backtesting, which is more about to use charts. Is there any premium feature needed? So anonymous attendee would like to use whether effectively to use charts, do they need to get premium TradingView? And maybe that's a question that can actually be specified a little further, but I assume it's for indicators on charts, say like a Bollinger Band or something.
Actually, I do have a premium TradingView account, but before I had one, I just had the normal account, and I think there was no difficulty for me doing what Jahan has demonstrated there. It's you can do that.
So,
yeah,
with a free TradingView account, you don't have access to the webhook or the alerts.
Oh, you don't.
You have all the technical analysis. You can load up RSI, Bollinger Bands, or everything else, but you can't use webhooks. So I believe you do need a premium account. But for those people that do use TradingView and kind of their signals, there are signal providers on TradingView that provide, sell their signals there. So I think you do need that.
Yeah.
And then do we want to go? Oh, sorry.
Go on. Yeah.
No, I just with that being answered, I wanted to go into the topic of backtesting, because I think that is obviously an interesting one. And maybe there's more wide questions about how to do the backtesting on the bot, basically, right? And
I mean,
Will I guess say something?
I think Jahan,
the backtesting, it's a very there's many more ways to do it wrong than there is to do it right, is probably the simplest way to put it. There's so many assumptions and things that people can make with backtesting that just simply would render it completely useless. I think the correct way, with the environment that we've doing this trading, the correct way is to basically replay data through the bot. So you write trading logic and you replay data, and you make assumptions about the jitter, make assumptions about the latency that you would expect, and basically do it on that basis. So that requires a bit of work to set that up. There of course there's other types of kind of high level checks you could do just to see, is a signal actually got any alpha in it, or is the signal actually doing the right thing? For that, you really need to open up a Jupyter notebook or some kind of tool to analyze the data. So the short, maybe the simple answer is that it's not an easy problem. We've seen other bot providers do have a backtesting platform, but that doesn't necessarily mean it's accurate or it's reliable. It's kind of more rough and ready kind of back of the envelope type of thing. I think maybe we might consider doing something similar in the future, but for now, we don't have anything right now. But there's nothing. I mean, we have all the data. I think we can maybe do a webinar on showing people how to backtest their own algos. But it's you know, it's kind of, in some ways, forward testing is probably a better way to go. You know, start off the bot with a small amount of capital, and really just you know, once you've got some confidence in the execution and risk management, then you can slowly scale it up.
With an account size of, you know, well, you know, 150, say, US dollars, you can go for a long period of time with if you're running a reasonably conservative bot. You won't have, you know, that's all you really need. So putting that at risk is, in a sense, you know, you're doing forward testing in the live market. Being in the live market itself it makes the test much better. Someone's asked, so there is no risk management built into the bot by default. Is that correct? So this is a starter bot, and it does have a component of risk management. That's the limitation on how far it will go one side of the market. So it will, for instance, if you have 5 rungs and the market spikes, it will hit those 5, and then if it continues to spike, it will, you know, will sell those 5 into a rising market, and that will probably, if the price doesn't come down again, result in a loss of whatever negative P&L those 5 rungs generate, which is not going to be all your money, but it'll be a loss. But then after that, the next reset, you won't get any sell orders; you'll only get buys. So it'll likely sort of buy back those. You'll take a small loss, and there you go. But probably if you're watching your bot as it starts to spike, you may it's your bot, so there are other ways to do risk management, and you're encouraged to investigate that and tune the bot, or, you know, take that as an example and then do something completely different, or say come to the Discord and have a look at what other people have done there, because people have been sharing some very interesting code based on technical analysis of various sorts, for instance, both RSI and the MACD technical analysis and combinations of those. It's quite very interesting to go through that.
Yeah, no, I would agree. I think GitHub, right, is full of potential templates. There's so many inspirations available. But clearly, there's no. It's always about the learning journey, right? And that's sort of what we wanted to start here with many of you, is start that learning journey, take up a template and start configuring it, start improving it over time. But this should be helping you for the first 30 minutes, maybe 60 minutes, to get it up and running and observe how it behaves in certain market conditions, and then go from there and refine the bot. I'm just checking with the audience as we come close to the hour, which is the time we originally planned for this right now. Is there anybody that has further questions? If so, please type them in. We're happy to help answer. And if you would like to book one of the one-on-one sessions with Richard and or with one of our engineers to discuss, for example, how your trading bot journey goes, then please make sure to use the Calendly links that Richard has shared about 25 minutes ago in the chat, and that we'll also make sure you'll get by email after this webinar. Thanks, Johan, for sharing again link.
Yeah, I was just looking for it and thought it'd be worth just sharing it.
I'll tell you what, I'll just throw in the other links there as well, which include that Calendly link as well. So these are, you can just cut and paste that and throw it somewhere, so you can see that you join the Discord there, the hackathon, and those other links didn't come up, but, you know, say hello to us, and Be social, if you like. That's fine. We like to talk to people, like to hear about ideas and people's journeys.
Yeah, and anybody that would like to join the hackathon, I think there was a question. The hackathon is organized by Taipei Blockchain Week. We are one of the participants and sponsors there. And our challenge for the hackathon is to create your own trading bot, which can be on ProfitView, of course. The bounty is up to $8,000, so there's a lot to win for. It's going from Monday the 11th till Wednesday the 13th. It's happening in Taipei, but I think you can join online. And I have shared in one of the answers just now the link to the Taipei Blockchain Week organizers. If you're interested in participating in the hackathon, please get in touch. You can still sign up. There is a Discord to find a team if you haven't yet. And as said, anybody that is a participant in this webinar, we'll look forward to seeing you on Monday in Taipei then.
Yeah, great.
Sounds good.
Right, we've got a few more questions coming. Yeah. Can this bot run on legacy markets or MetaTrader? And for Omar, I guess I can really very quickly skip that.
Yeah,
yes,
sure.
you will be able to rewatch it. We will publish this session. So don't worry if you've been late. We'll make it available probably on Monday next week. But over to the question about legacy markets.
Well, about the bot, I mean, my understanding of MetaTrade, I don't have a full idea. You would have to modify it quite a lot for MetaTrader, but the idea of it should follow. You know, it's a different arrangement when you go with MetaTrader. I would say if what you're interested in doing is writing algorithmic trading, you'll have much less worry and difficulty by using ProfitView. And now we don't cover traditional markets at the moment, but if you're interested in algorithmic trading, BitMEX, for instance, is a very liquid market, and it's a very good place to develop your skills, and quite honestly, to potentially, if you have good skills, make some money, just as you would on other markets. But you can take this code and adapt it, and you can use it to write a bot for other systems.
In theory, you could probably trade on other markets. So like you can use the Interactive Brokers API, install that. I mean, it's just Python. So you know, you could really go wild if you really wanted to. It won't be as easy. Obviously, we won't have all the connections, but I think that's what MetaTrader essentially do, is they're just the platform that do all the connections.
Yeah, that's right. I mean, you can, like I said before, we're sort of excited to see what people do, things that we never thought of, and I know it's going to happen. I just had to play around, and I created my own SQL database to keep track of my trades. Well, that's Python 3. It's part of what you get by the fact that it's a full Python environment. And other things I've done, I've connected to Google Sheets so that you can have output on your Google Sheet, and you can control your bot through Google Sheet if you want to do that. I can provide the code if anyone's interested. So there's a lot of scope. You can imagine, or you can have something running in an entirely different on your own server that then communicates, and very soon via Redis, so that you'll get a good performance and quite a you can imagine anyone with a bit of imagination and some skill, you can do really interesting things.
Yeah, ultimately, obviously, this community is mostly about stacking up sats. And unfortunately, MetaTrader won't allow you that. So
yeah,
stay stacking stats and margin in Bitcoin whenever possible, I guess.
BitMEX asked me to enter 2FA after a register, but I do not receive the email. Maybe you guys can help them out there.
I just replied in a message, but I think that might be a support ticket.
Okay. Yeah, usually works pretty fine. I had mostly no problems there, so keep trying. So
Cool.
maybe we're out of questions, are we? Or
And just the one last one from Donald. I would say there are ideas. You can join the Discord, and I believe trendline support and resistance. Relative strength index for sure. Depending on which sort of index you're sort of looking or trendline to do, we can definitely look to trade that.
and we have TAlib already installed. So if you look at TAlib and see how many studies it basically supports all the main studies, 100 and something different studies. So various studies which work with trend lines are likely to be available. And if they're not, then you can develop them.
Yeah, definitely join the Discord, as Thomas said. I mean, if you have any problems with the bot that Richard showed you today, you can ask questions there. It's probably the most active area that we have where there's discussions going on about these trading bots.
Someone asked, how much money have you ever made with your bots best month? I've tripled my money on 2 or 3 occasions, but I have to confess I've also been wrecked, once or twice. So that's life, and possibly I was trading too emotionally. And not as well. It's like I don't advise you to get wrecked, and a lot of the time it's because I was trading emotionally. It's always when I look back, I think what on earth was I doing there? But
Richard, you should be setting a good example.
Well, you're right. But the thing is, I guess it's a point that when you're trading with a trading bot, you do have the ability to intervene manually, and in fact you should. But when you do it and why, that's when the emotion comes in, and it remains a important aspect of sort of trading discipline, and I don't think you can really get away from
that.
Yeah. And I mean, again, the bot is no guarantee for you to make money. Plus, you don't need a bot if you just want 100x pay tomorrow, right? There's certainly ways to generate profits by individual analysis and or guessing. And I guess what a bot really helps you is reduce the times in which you're really just guessing and create a system in which you can kind of see when your assumptions were proving right and when your assumptions were proving wrong, because the bot doesn't add any emotion, doesn't add any lags, etc., to its execution. It'll basically just standardize your strategy, which for many leads to maybe a more consistent trading behavior, right? It may take off some of the amplitudes that you have in your trading, in both directions.
Asked how much money we're talking about here. I don't think I'm going to reveal these details because they're sort of somewhat personal. But I know that I know a lot of people. I know a lot of people who do trade, who trade and who trade on BitMEX, and there's a very wide range of sort of trading volumes and sort of amounts involved, and they do go up to a very high level. But one of the great things about crypto trading, and certainly on BitMEX, is that you can trade with small amounts as well and trade competitively. So don't be reticent in trying it out, but be very cautious if you're going to go ahead with larger quantities. But certainly those quantities can be very large. And if you look at things like, I don't know, you can see that you look at the BitMEX interface and see the size of orders going in and the size of trades. There are large quantities traded and there are very small quantities traded, and it's all quite transparent.
All right. And I think with that, we can probably conclude it. Thank you very much to Richard, obviously, to Johan, to Thomas, to Claire, to everybody that joined us today. We hope this was a very helpful session for you. We hope you want to try your first trading bot, and the last 65 minutes helped you to start that journey. Once again, invitation to join the Discord, in which we keep discussing and refining all our own bots. There is the Taipei Blockchain Week next week for those of you that are interested in creating their own bot and put it right into the competition there. And then there's obviously the one-on-one sessions that we have available with Richard, with Pez, with a few others. If you would like to discuss how to get started after this and how to refine your bot further, make sure you use the sign-up codes for your first month of ProfitView TBW23. And if you sign up on BitMEX, we reward 10 BMEX, which is roughly $3 currently, for every $10,000 in notional volume traded. So that's a pretty good offer. And you can easily make a couple of hundreds in your first month of trading there, especially if you use a bot, because that is almost guaranteed. Bots trade higher volumes than many of us would do clicking. And I think with that, thank you very much.
Yeah.
And have a nice evening, afternoon, wherever you are.